Hello everyone. Do you know the business scenario where the freight is unplanned and has to be applied at the time of purchase order, which needs to be get inventorized or which needs to be get expensed out, how it can happen in the system? Let's take an example with two purchase order. The first purchase order with freight cost of $35 as an unplanned cost and should be applied at the time of purchase order and should get inventorized at the time of GRN, and what will be the accounting entry at the time of GRN in the system. Another way, on the second hand, we have a scenario where the purchase order has been created with unplanned cost of $35, but that $35 should not get inventorized. It should get expense out into the system. Now, what will be the accounting entry and at what level it will hit into the system? Let's check this out. Let's start with the first scenario where the purchase order being raised for quantity 1 with this material, where vendor has say that there will be a charge of some freight cost applied to the purchase order. However, that freight cost will not be an inclusive part of the system of or the basic price of the material. Now, how it can be treated and how we can make sure to get this inventorized, rather we do not want to expense out as a profit and loss account, right? How we can do that? We have to go to the purchase order screen. At the time of PRIO creation, we have to add the value of the freight in the condition type FRB1. These are the custom types you can create in the system. There are three kind of freight cost you can find with the calculation. One at the level of the value which you can post, one at the level of the percentage, another with the value according to the quantity. Means there are 5 quantities, so freight will be $2 per quantity can be charged, and system will calculate according to the GRN or the good receipt you will make into the system. This time we have taken an example for the freight with the fixed value of $35. Now we have created the purchase order, added the $35 of cost in the system as a freight cost. Now how system will behave at the time of good receive we have done in the system. So let's see to it. Let's go to the good received into the system. I'll open the good receipt. What will happen? The base value of the quantity will remain the same as it was, but when you add the freight into it, it will add the inventory cost. It will get inventorized. How it will get inventorized? I'll go to the accounting document and you will see the difference. In accounting, what happened? System made an entry where the metal account got inventorized with the value of base cost of the inventory $482.36 and addition to the freight cost, which is the freight clearing account $35. So what will happen at the time of inventory? The inventory moving average price what we have maintained in the system, it will get increased. The base price, if we will check, that is coming as $482. But if we check at the time of material costing or the material moving average price, it will be increased in the system to $499.86 with the extra cost of freight we have added in the system so far. Now there is another scenario that where we have taken a scenario to get the normal processing into the system and take the freight as a expense out entry out of the purchase order. How we can treat that one? That is a simple treatment. No freight condition has to be added into the purchase order. Directly we will do the good receipt entry into the system. The one it is happened over here. The accounting, if you see, there will be only the inventory account gets debited against the GRIR account. No freight have been charged so far, although that freight is a unplanned or a planned cost from the vendor side, which company wants to expense out. What they will do at the time of invoicing, doing the Miro invoicing in the system, they will go to the purchase order first, right? Review the purchase order number. At the time of invoicing in the Miro section, they can inventorize it through the system itself by going to the detail section, unplanned delivery cost. Suppose $35, I'll put it over here. I'll go to the purchase order. Goods received and unplanned delivery cost, both sections to be triggered into the system. Pick up the value if the GRN has been done, right? If you simulate the entry, as of now it will not appear because I have not filled the required data into the system. So I'll simulate the entry. Inventory account will get hit by $35. This is my inventory GL, which is hit by $35. So the difference between the two process order and the business scenario with freight and without freight can be happen in the system. In both cases, you can inventorize the freight as an unplanned or a planned cost, or you can also expense out at the time of Miro invoicing, where you have to process in the system to expense out. As a GL account, you can select and expense out the entry by selecting the freight cost, which will hit your profit and loss account. So there are multiple scenarios you can find related to the freight cost, custom charge for the import POs, or any other cost which is implied on and above of the basic purchase order will be treated in SAP like this. Thank you for watching. Have a nice day.